interest is in the order of 35 to 40%. That gives a definite coverage for the interest rate.
I'll just come back to you in a minute, Mr. Mohanty. We have Bank of India on the line, and they had a rating downgrade from S&P earlier today. Their standalone credit profile rating was lowered to BB+, and we are joined by Mr. BP Sharma, the ED of Bank of India. Mr. Sharma, will this make life difficult in the sense that will you have to pay more for your CDs or for any of the instruments through which you raise money?
No, let me start with a small clarification. There has been no downgradation so far overall rating is concerned.
Yes.
Or the outlook is concerned.
Yes.
Okay. That is first point. This downgradation in this may have little bit impact on subordinate bonds. But if you see our capital adequacy, we are quite comfortable. We do not have a compulsion per se agent debt to raise further subordinated debts. But yes, going ahead, if we raise it, it may have little bit impact on the pricing front.
No, because the S&P note said that you have for the next 12 months they see problem on your assets. It is quite possible that therefore they will not change the rating at least for the next 12 months. You won't need subordinated debt for the next 12 months?
That's what I told you. Is on 31st March, our capital adequacy position is comfortable. We are not looking at a growth which calls for higher capital.
Okay.
We will be concentrating on that kind of credit which attracts lower capital.
So you're not raising any funds, Mr. Sharma, in FY16 from the markets?
No such plan is on debt.
Okay. What is your sense in terms of your stressed asset formation? Because it had touched a record high in the previous quarter and you've sold 900 crores to asset reconstruction companies as well. What can we expect in this fiscal from you?
These two developments is the biggest challenge which we are confronting now. No doubt about that. Our delinquency rate has gone up this March over last March.
Oh.
But then, it's just like a ECG graph. Now, going ahead, our entire concentration is to prevent further slippage and to resolve NPL account. Here, we are changing a strategy a little bit.
How?
Instead of concentrating on big ticketing advances, which have been classified as NPA, we have a large number of accounts where the outstanding is quite low, where resolving the account is much more easier. This quarter, we have picked up, I'll tell you, accounts where outstanding is up to 10 lakh. We have a portfolio of around 3,000 crores. This is what we are eyeing to resolve this quarter.
Okay, that you will resolve, but it was still a rise of 33% in your gross NPLs in the fourth quarter. In this first quarter of the current year, how much might your slippages increase? I
can only tell you one thing. The rise which has been seen this March is the peak.
Okay. Okay. Mr. Sharma, just one quick question. Can you break up what your slippages were in the previous quarter and your fresh restructuring? And from your slippages, how much was from infrastructure and how much from other sectors?
Okay. Let me see the papers. I'll answer it. Please hold on.
Okay. Yeah. He's just getting the information.
Out of 4,000 slippage in restructure, this quarter itself was about 50%.
Okay. Okay. And your fresh slippages were how much in fourth quarter?
Fourth quarter, the slippage was about
10,000 crore.
Around 8,000 crore.
All right. All right. And 4,000 crore totally are restructured loans
for
that
the entire year.
Slipped. All right. Thank you, sir. Thank you very much for joining us with all those details. All right. So subordinate debt could get expensive for Bank of India. That is the net impact, and the stock is reacting to that.